Ladies and gentlemen, welcome to HPT, the YouTube channel that collects reliable data and builds systems off it. Today, I want to break down a beautiful trade that we took last week on the Discord, and I want to show you guys. I really want to flesh out how important it truly is to trust your system, right? Because you're always going to be presented with tons of different trades and variables, right? You're always going to be presented with the what ifs, right? Well, what if this happens, right? What if this happens? What if I get stomped out of my trade? What if buyers bounce off this level? What if this? What if that, right? And we have to let go of what ifs. In terms of consistent profitability, it is not your job to be green today. I know that sounds so hard. It's such a paradox. It doesn't make sense, but it is the truth. My friend, you are not here to have a green day. You are here to have a green month, a green year. And in this video, I'm going to break down the difference, right? It doesn't mean go out and trash your account and just trade whatever. It means develop an approach that's actually repeatable, right? You need very simple criteria that's very easy to see, right? Because it's your job not to be green today, but to execute that approach over and over again. Right? So what is that approach? Well, let's break into it. So over here, you are going to see this is the trade we took on March 12th, 2025, right? It was a beautiful trade, cleared over 91%, right? And it's a very simple strategy. It currently has an 82% win ratio. If you click the links below, it's going to take you to my website. You click the first link below, it's going to bring you to this page, right? This is the High Performance Trader Crossover mini course, right? So you come to this page, and this page is going to break down our strategy to a T, right? It's going to really flesh it out, dive in deep detail, because I don't have time in this video to do it, and it's going to really help you understand what it is we look for. And if you click this link right here, it's going to bring you to a data report. This is called a high-level summary. See, before I was a trader, I measured 5G antennas day in and day out, all their frequencies, and I studied them. I found patterns in them, right? Because what you cannot see, you can learn to measure in terms of frequency, vibration, and energy. And in between that data lies patterns, lies repeatability, lies consistency. And that's exactly what our job is on the market. So what I did was develop a very simple 3-step approach. And over here on the large data review, you can see out of 107 trades, 88 of them were profitable in at least $1 direction, right? So this gives us an 82% win ratio. This is a phenomenal resource, and it is completely free. So come over, click the link, subscribe to my data reports, and then subscribe to the free mini course that really breaks it down, really fleshes it out so that you can learn to execute this approach completely for free, right? So in the goal, guys, once again, is to actually obtain consistent results, right? So Josh, why is it important to trade a simple 3-step approach? Well, it's important because of one word: emotions. If you're watching this video, chances are you're a day trader. And if you're a day trader, chances are you're very familiar with emotions, right? Market psychology is one of the most studied topics underneath the sun, yet the least understood, right? We are constantly governed by confirmation biases, all types of different biases that lead us in the wrong direction. See, your brain has been programmed to predict things, right? We like to understand what we're looking at. And in terms of the market, this can get extremely stressful, right? Because nobody, I don't care if you're Warren Buffett, Jimmy Buffett, it doesn't matter. Nobody can predict the stock market. Now, this leads me to touch on a topic that's extremely important: expectations, right? See, if you're struggling with consistency, chances are your expectations are all out of whack, right? Once again, like we were talking about in the beginning of this video, chances are you're trying to be green every single day. And you trying to be green every single day is actually the reason why you are not consistently profitable, right? Because If you're trying to be green every single day, that's a lot of pressure. Pressure breeds emotion. Emotions such as fear, doubt, anxiety, well, they bring inconsistent results. Buy bad entries, forced entries, late entries, not stopping out of losing trades, right? What happens when it's Friday and you find yourself in a losing trade? Are you going to cut it? Well, if you're trying to be green for the day, chances are you're going to hold it, right? So once again, the importance of having a three-step approach is paramount in terms of becoming consistent, because until you can approach the market non-biased, non-emotional, and rational, right? Until you could do that, you're going to make bad decisions, right? So let's break down the trade we took, what I was looking at, and such, right? So once again, our three-step approach is very simple. Our first step to our criteria is identify open print, right? So open print is the 9:30 bell price. Once 9:30 goes off, ding ding, right? You identify the open. If you join my team, or if you even comment below, I will give you my ThinkScript indicator, which is a line of code that you implement in your ThinkScript, and it will plot open print for you, automated. This way you ain't got to worry about it, right? You see that yellow line right there? That's open print. So every day at 9:30, bam, it populates on my chart. First step, done. Number 2 is identify the moving average cross, right? So once again, it's up to me as a day trader to spot who's in control of the market. This is how we identify opportunity. So once again, what tool can I use to do this? Because I don't want to predict. I don't want to force anything. I want to let the market tell me that the conditions are shifting, right? Well, this is how we use our EMA cloud. Once again, if you comment below and ask for it, I will give it to you for free, right? Because TOS does not have an EMA cloud indicator. You need to implement our ThinkScript code, which I will provide for you if you ask. All you got to do is ask, right? So basically, number 1 is identify open print. Number 2 is identify the moving average cross. This is the EMA cloud going from green to red, or red to green, right? This symbolizes that one side, whether it be buyers or sellers, are taking control of the market. Now, number 3, it's the most important part of this strategy, is identify the RBI or the GBI. This is a very simple concept, right? What's an RBI? Well, I'll show you a GBI. A GBI, let me just get rid of this. A GBI, which is a green bar that gets ignored, meaning a green bar populates and then a red bar completely smokes, decimates, destroys it. The low of this green bar would be buyers. This red bar just pushed all the way through all those market orders. So I want you to think of it like a seesaw, right? The market is a auction, meaning there's buyers versus sellers, right? Now, there's never more buyers than sellers, right? Because for a trade to actually happen, both sides need to agree on a price. So how does price move? Well, by being aggressive, right? When those buyers or sellers are more aggressive than the opposing side, you get price action, because in this case, sellers are willing to sell it at a higher price, causing price to go down, right? So when sellers get more aggressive and they're hitting the ask, right? They're hitting the ask, price is going to decrease, right? Because the supply of shares is increasing. It's kind of a hard concept to grasp. If you guys want more, join Trader Bootcamp. I have a course that is made up of 21 mini courses that flesh out all this beautiful information in a very simple way. So click the links below, get involved. If you want 20% off, use promo code EXECUTE, right? So anyways, a green bar ignored is a green bar that gets ignored. It's very simple. So once again, open prints established, moving average cross, green bar ignored. We're in the market short, targeting our downside target. Now, where do we get our downside target? From the previous day, right? So I am famously known for trading pit numbers. These are critical levels, which is previous day high, low, open, close. These are our targets. These are our entries. These levels give us the context required to actually be trading on the right side of the market. They're extremely valuable. So once I see this, I'm in the market short, and I'm now targeting end of day. And that is how we capitalized on a beautiful trade for 91% ROI. Right? It was really, really effective. I'll show you guys over here in SPY Alerts how we were able to capitalize on this, what we were looking for, but more importantly, how I updated it in the Discord so that my team could take advantage of it. So you see right here at 10:12 a.m., price fell down. I've identified my 3-step criteria. Once again, pulling all the emotion out of the setup, using the reliable system that we have built, that we collected data on, and that we trust in. It's got an 82% win ratio. Why wouldn't I take it, right? We need to pull that emotion out. We need to make sure our input matches our output. If we want consistent results as an output, we need a consistent approach as an input, right? Newton's third law. Every action has an equal and opposite reaction, right? So our input needs to match our output and vice versa. So once again, open prints established. This gives us the context that's required to trade on the right side of the market. Number 2, moving average cross. Once again, this gives us the context, the understanding of who currently has the ball. And then the GBI, the green bar ignored. Why? Well, number 1, I want to see those buyers lose, and most importantly, I need somewhere to put my stop loss, right? Our job isn't to be green today, it's to manage capital appropriately. Therefore, I need a solid place to put my stop loss, which will go directly above the green bar. And then we're going to target end of day, all right? You can see I'm telling my team here, trust the process, execute, one and done. At literally, what is this, 10:54 a.m. ripping into end of day. So guys, I hope you like this video. If you're new to my channel, just know this is what we do over here at HPT. There's a lot of fake gurus out there. What I'm here to do is study data, right? I'm not a day trader. I'm a data analyst, right? That studies trades and then builds reliable systems and then gives them to the public. Right? So if you guys like this video, make sure you hit a like, subscribe for more content, comment below, ask for those indicators, get involved, share this with someone that needs it, and more importantly, join a team that shows up each and every single day and executes flawlessly. I'll see you in the next lesson.